What's up everyone, it's Scotty with Money Vesting. So in this video, we are going to be doing fundamental analysis in under 10 minutes. So the purpose of this video is to kind of show you guys that you don't need a lot of time to actually conduct proper fundamental analysis. It can sometimes take hours and hours to kind of read through the 10Ks and 10Qs and go through the earnings calls and reports. And even though those stuff is very, very important, that's always encouraged. The more you know about the company, the better it is. Sometimes, life gets in the way. We're always busy. So I wanted to go over some of the key metrics from a fundamental analysis standpoint, some of the numbers, the quantitative analysis that we can look at for every company and start that next research process, right? So this is going to be a quick spreadsheet, which I've already created for all of you guys. So for all of our Patreon members, and if you want to join, this will be accessible to all the members as well. You can download it. And again, all the models and all the formulas are already plugged in. All you have to do is find the information, and I'm going to show you guys in this video where you can find it, find the actual numbers, plug this in, and it will calculate everything for you. So this is a good starting point. Again, this is not a replacement to actually deep diving into a company and looking into this company in a lot more detail, but this is simply a process to kind of understand how I go about analyzing a company, right? If the companies kind of meet these check marks, then it makes sense for me to dive into it in a little bit more detail and then start to read through the 10Ks and 10Qs and learn more about the business. So again, this is not a substitute or a replacement to actual fundamental analysis, but this is a very, very good starting point to kind of get through this in under 10 minutes. And that's the whole point of this video. And these types of tutorials I actually do for, our Patreon members, but this I, decided to kind of put it out there on YouTube and kind of help you guys understand how we look for companies and what we look for in companies as well. So hope you guys enjoyed this video and found it helpful. And also make sure that you drop a like and subscribe if you're new, and check out the Patreon link down in the description below if you want to access this spreadsheet and of course get access to these tutorials in the future, private videos on fundamental technical analysis as well. So without further ado, we are going to get started with our 10 minutes, and the company that we are going to be analyzing is going to be Facebook, ticker symbol FB. So 3, 2, 1, let's get started. So the first thing we're going to do is we're going to go over to seekingalpha.com. And again, it's a free website. Everyone has access to it. You can literally go to seekingalpha.com and there is going to be a search bar up top. We're going to type in for Facebook. So we're going to go over to Meta Platforms. This is going to be the front page. Then you're going to come over to financials. And what we're really doing right now is grabbing the inputs, right? We're grabbing the fundamentals itself. So revenues, that's the first thing we're going to take on. That's 27,638. So we're going to come over to our spreadsheet. We're going to type in 27,638. Then we're going to move on to 2017. 4653, so 4653, then we're going to move on to 2018, 55838, 55838. And trust me, this is the process. You have to kind of get these numbers in so that you can get on to the next step and start analyzing this from a more deeper perspective. So 2020, 85965, 85965. So this formula already is plugged in. So what's this doing is calculating the compounded annual growth rate for Facebook's top line. So you'll notice the revenue has been growing at a compounded annual growth rate of 32%. The reason why that receives a check is because it's over 10%. That's what we look for. That we look for a compounded annual growth rate of over 10%. Facebook's doing 32%. Big check mark right there for Facebook. Next, we're going to look at gross profit, which is going to be this line item. So 23,849. So we're going to plug that in. 2017, 35,199. We're going to move on to 2018, 46,483, 46,483. Just got to fix this formula. So 35,199 here. And then we're going to move on to 2019. We got 57,927, 57,927. And then finally 2020, we got 69,273, 69,273. So this one's growing at 30%, receives another check mark because we also want gross profits to grow by a little bit over 10%. So that's also very, very strong. And then we're going to look at the gross profit margin. That's simply going to be this divided by this. And we're going to move all the way right over here. And Facebook has very, very strong margins, right? Over 80%, 86%. You'll notice that this number actually receives a negative error, which means that Facebook's gross margin has not really grown over the last 5 years. In fact, we actually dipped down from 86% down to 80%. So on a compounded basis, Facebook's gross margin has decreased by about 1.7%. But I will let this one slide only because Facebook's gross margins in itself is so high at over 86%. you can't expect the company to go from 86 to 87 to 88 to over 90% gross margins. I mean, that becomes very unrealistic after a certain point. So I'm happy as long as these margins stay above 80% for Facebook. So this one, again, you have to take it on a case-by-case basis. It is not like black or white. It's not like one thing is right and one thing is wrong. You have to really understand which company you're analyzing, which industry does it belong to, right? How are the gross margins in itself, and what type of growth are you looking for? So for me, 80% is good. So I'm gonna let this one slide, even though the formula built in is gonna look for at least 2 percentage point increases over the last 5 years. Next up, we're going to look for EBITDA growth. So we're going to come all the way down here for EBITDA. So you'll notice EBITDA is going to be right here. It's earnings before interest, taxes, depreciation, amortization. I've done a complete tutorial on this one as well in our fundamental analysis course. So 14,769. So 69. Then we've got 23,228, 23,228. Then we got 2018, 29,228, 29,228. Then we got 34,727. And then we got 39,553, 39,533. So 28% growth compounded annually. Nice check mark for Facebook on that metric. And then we are going to move on to net income. Net income is going to be 10,217. Then we move on to 15,934, 15,934. Then we move on to 22,112, 22,112. And then we move on to 2019, 18,458. 18,458. Then we got 2020, finally 29,146. So for net income, we've got a nice 30% compounded annual growth rate, a very, very nice growth for Facebook's bottom line, and that is also a check mark for Facebook. Next up, we're going to move on to free cash flows. We're going to come over here to cash flows. I'm going to scroll all the way at the bottom, and what we're really looking for is unlevered free cash flow for the company, 8259. So 8256, we're just going to round up a little bit. So 8260, 8260 is going to be over here. Then we got 11626, 11627. We're just going to round up a little bit. And then we got 10365, 10365. 2019 is going to be 19323, 19323. And then 2020, we've got 16007, 16007. We got about an 18% compounded annual growth rate, another check mark for Facebook there. Low dilution. So what we're going to come back to is the income statement. And we're going to scroll all the way down, and we're going to look for diluted weighted shares outstanding, which is going to be right over here. And then look for these numbers right here, 2925. It's 2925. Then we've got 2956, 2956. Finally, we got 2921. And of course, you don't have to do it under 10 minutes. It's just, nice, quick way to analyze these companies so that we save time and we're also able to get the most important data that we want from a company. So you'll notice that low dilution, so shares outstanding have actually decreased for Facebook. They've actually gone from 2.9 billion to now just over 2.8 billion. And that's a decrease of over 1%. That's what we want. And Facebook receives another check mark for that as well. And then finally, net debt. So for net debt, we're going to come over to the balance sheet. How are we doing on time? So we got less than 5 minutes left. So for balance sheet, we're going to come all the way down here. We got net debt over here, and we're going to take these numbers out. So negative 29,449, 29,449. Then we've got negative 41,711, negative 41,711. Finally, negative 4614, negative 4614. And then finally, we've got negative 44,531, and then 2020 is going to be negative 5777. So another check mark because the net debt is negative. So what that really means is, cash amount is more than the actual total debt for the company, right? So Facebook so far has all checks except for one error, which is the margin expansion, which I'm going to let slide because the margins already are so high for Facebook at over 80%. So that's completely normal. That's completely okay for Facebook. Finally, we arrive at valuation. And by the way, if I weren't explaining every single thing, we might have been able to save some time. But valuations for Facebook, you're going to come over to this tab at valuations. Forward PE is sitting at under 22. So we're going to type in 22 here. Forward price of sales right here is going to be for Facebook sitting just over 7. So we're going to type 7 over here. Forward price to cash flow. Free cash flow, we're sitting at just over 17. I'm going to round up to 18 levels. And then enterprise value to EBITDA forward is just over 12. So very, very nice metrics. And again, these are already plugged in. So this is under 30. This is under 10. This is under 25, and this is under 25 as well. So all these are going to be check marks for Facebook. So look at this. What happened if I do this to 35, right? Error. This right here, if I do it to 40, another error. So you get the idea, right? So these are already plugged in for Facebook. How much time do we have? Less than 2.5 minutes. Finally, we arrive at the price target as well. So this is going to be a little bit condensed. I've done some valuation analysis on Facebook in the past, and I've also done a complete course on how to actually build your valuation models, price to earnings, price to sales, price to free cash flow, all those different things. So this is going to be a very, very rough estimate, rough idea on what Facebook's growth is going to look like for the next 12 months. So if you come over to Seeking Alpha again, if you come over to growth, you'll notice that the forward growth for Facebook sits at 25, almost 26%. So we're going to take 26% here. You'll notice the revenue jumps to $108 billion. And then you can take a look at the average multiple for Facebook, right? So the net income margin, you can simply take net income. So that's going to be 29 divided by the revenue. That's about a 34% margin, right? 34%, that gives you a 36 billion multiple, 36 billion in net income. And then all you got to do is assign multiples over here. So over here and on this column, you just have to assign these multiples. Price to sales, I think Facebook can demand about an 8 price to sales. And PE multiple, PE target, I think Facebook can arrive at least a 30 times multiple. So we get about a $300 target and a $381 target for Facebook from these two different models, price to sales and price to earnings. And when we take a weighted average price, so weighted price target, then all you got to do simply, and again, these formulas I'm going to include as well. You're going to take this times 0.5 plus you get this right here times 0.5, and your price target sits at $340.76 for Facebook 12 months out, which based on the current valuation, current price target, current price for Facebook right now, we are sitting at just over $301. So for the next 12 months, $340 means that we've got about a 15% upside for Facebook moving forward. And of course, I've done an analysis 5 years out as well for the company, and 15 to 20% compounded annually is going to double the share price over the next 5 years. So how are we on time right now? So we got less than 40 seconds left. So pretty much the analysis is done, but you get the idea. This is the entire key metrics that we look for. We look for revenue growth, we look for gross profit, we look for margin expansion, EBITDA growth, net income growth, free cash flow growth, and the company also needs to have low dilution and low debt, or in other words, needs to have negative net debt. We also look for valuation, which in my view, Facebook currently trades at a very, very low valuation on a forward basis. And for the next 12 months, if you think the revenues are going to grow by 26%, net income margin is going to be 34%, and then assigning a very, very conservative multiple at 8 times price to sales and 30 times price to earnings, Facebook trades at about it should be valued at roughly $340. That obviously, represents about 13 to 14% upside on the stock right now. So there we go. There is the complete analysis on Facebook for this example. You can do this with any stock. This spreadsheet will be available to all of our members. If you want to get access, you can download it straight from our Patreon. It's going to be for the lowest tier. It's going to be available to everyone if you simply want to join and get access to this. But again, I want to be very clear. This is not a replacement or a substitute to actual, doing some proper analysis and deep diving into certain companies and reading the 10Ks and 10Qs. But this is a very quick way on how to actually analyze companies and kind of go over the certain metrics that are very, very helpful in fundamental analysis. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe if you're new, check out the Patreon link down in the description below. I will leave a link down for this spreadsheet where you can download it. As always, happy investing, and I'll see you guys in the next video.